bless you. Making today a video about stock trading. I have some tips for people who just begin trading. I started trading like 10 years ago, I think, and I made a lot of mistakes at the beginning, and I lost a lot of money, and I don't want you to do the same mistakes like myself. So the first thing which I learned about stock market, first rule which nobody explained to me before, was to protect my investment, not to lose money. How not to lose money? Everybody wants to make money, of course, but they don't realize what risks are there. Okay, so I have like 20 tips. You need to concentrate actually on the first 5 or 8. That will be enough for the beginning. Okay, let's see what is talking about. Okay, so the first tip is, do not jump in the stock market and boost your feet. You don't need to put a lot of money in them. You don't need to be very aggressive, you know. You need to take it easy, okay, because you don't know too much about it, and you work hard for that money, okay. Read at least one book about stock market, okay. If you don't have time or you don't want to do it, at least have the patience and watch this video until the end, because I'll give you very good tips, okay. First, you need to trade on paper, okay, for at least 1 month, maybe 6 months will be even better. You know, you think you know about a company, Apple, Facebook, you know, this stocks everybody talking about, and you think you're gonna make money. Okay, that's fine. You may be very skilled. You may have some natural instincts in yourself, you know, but you need to prove to yourself this is the case, okay? So you need to trade on paper first, okay? Do not invest in individual stocks. Start with ETFs. I'll come back to this, you know, I'll explain exactly what is an ETF, okay? And the most important one for you as a beginner is used cost averaging. Meaning you invest an equal amount of money every month and buy ETFs at different prices, okay? You don't want to put $10,000, for example, in a ETF or in a stock, then that stop to drop or the market collapse next day or the next month, you know. You need to understand, you need to invest a little bit at a time. So in this way you can buy a different prices, okay. Sometimes it's lower, sometimes low. This makes an average, and overall you're gonna make money, okay. But if you make a mistake at the beginning, you have an entry point, very bad entry point, then it's really bad. So you don't need to do this. Cost averaging is the best for many people actually, but especially for beginners, okay. Avoid 2x and especially 3x leverage ETFs. I'll come back to this. You may not heard about this, okay. I'll come back. Now I'm just reading the list, and then I'll take time to explain to you what everything means, okay. Do not invest in penny stocks, those which are under $1, you know, like 2 cents, 4 cents. You can make a lot of money, but you can lose a lot of money, and usually you lose. Trust me about this. Trust me in this. You're gonna lose a lot of money, and very fast, okay. This is not for a beginner. Don't even touch that, okay. Do not directly short stocks or ETFs. Use inverse ETFs if you want to short the market, or use puts, okay. So many beginners don't know that actually you can bet that a stock actually is moving down. If your bet is moving down and it's moving down, you're gonna make money, okay. But if your bet is moving down, which means shorting that stock, and it goes up, you're gonna lose a lot of money. And the trouble is, if you have $10,000, for example, and you go long, I mean, you buy a stock like Apple, okay, you buy it now at 100 and goes to zero, say, you know, you lose $10,000, okay. If you short Apple at 100, okay, and it goes up, there is no limit how much you lose. You're not gonna lose only 10,000. You can lose 100,000, okay, or much more than that. You know, you need to be very careful. I'll show you how to do this, okay. Don't either be a perma bull, which means always long, always buy thing, and believe market won't never go down, or a perma bear, always short. You will see a lot of people talking about this, you know. But if you have to choose between one, you better be a perma bull. Okay, I'll explain why, especially with index ETFs, not with individuals. So, okay. Now it's a little bit from here on. It's some intermediate. I'll touch this roughly, you know, but use the chart to see if this market is moving up or down. I'll show you immediately what I'm talking about. You know, use a good software program to look at the chart, identify trends, taste your favorite indicator. The best software by far, at least one which I am aware, is you can find it at freestockscharts.com. This is the best. I'll show you immediately why. Okay. Let's go to number 12. Start you analyzing the market with technical analysis. Okay, if you do this, you know, every beginner start with fundamental analysis, because this is, you know, you want to be you're a clever guy. You know, you want to go and you say I'm buying Apple, but look why? Because I think they have a new product, whatever. You know, you read in the newspapers. You have many. That's fundamental analysis. You go to I'll show you what those indicators are. Okay, technical analysis is more about how the price moves. You need to look at the chart, you know, but this is much easier. You know, if you think you are a beginning and you're gonna master fundamental analysis from the very, you're wrong actually. You know, this may take years to master, if ever. Okay, the trap of buy low, sell high. Of course, everybody wants to buy low and sell high, but the stock or the ETF need to be in an uptrend. If it's in a downtrend, what is low today will be even lower tomorrow or next week. This is really bad, okay? So I'll show you. Now we're talking about moving averages, MACD. I'm already talking about some indicators. I'll show you some signals. Then one which people don't use, DMI, directional movement indicator. This is a sentiment, people, how people react, how people think about that. So okay, then how to identify and use support and resistance levels. Okay, so Apple goes down right now, it's in a downtrend. Okay, and they may have a support level somewhere. I'll show you what I mean by support level. Say it's go to 90, and from there probably it's gonna bounce up. Okay, so that's very important. If you see it touching that level, then bouncing a little bit up, you can buy at that point. Or resistance is the other way around, goes up, 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 and have a resistance point somewhere and cannot pass that. If it doesn't pass, definitely is gonna move down and very fast. Okay, I'll show you how to use uptrend and downtrend lines. Okay, this will be easy, but they're very important. Then how to, this is already advanced, you know, how to protect your investment options. Okay, and how to trade options, and finally how to do day trading. Don't even touch this here, the from 12 to 20. Don't even think about right now. So what you need to do it's concentrate on this one. Actually, the first 8. These are the most important. Okay, so let's start with the first one. Do not jump in the stock market with both feet. That's really bad. As I say, you need to be very patient. You need to start with a very small amount of money, and okay, you need to take. Oh, actually, I'm gonna. Okay, just a second. I am bubbling here. Okay, so start with small amount of money. Okay, start with 1,000. Not go directly with 100,000 or 10,000, because you don't want to risk that. Okay. Read at least one trading book. This is a very good practice. Okay, at least one. Doesn't matter. Go to Amazon, Barnes and Nobles, find one. Will give you a lot. All of them are repeating a little bit for the investment. The advices for beginners will be the same in all of them. So trade on paper first, and I'm sure you there are two. I suggest you, there are many ways you can trade on paper, you know, like simulate trading. So one is if you join Street Survival, it's free. Okay, you can find it at this address, wallstreetsurvival.com. Let me show you. Okay, so you'll go in here, create for free an account, then you do trading. Okay, you buy it, and the day you buy like a real stock, will be the real price, which is a dime. Okay, you do this for a while, see how it's going on. Okay, this is one, and but I suggest you even a better one. Let me see in here. Okay. Okay, I created on MarketWatch, marketwatch.com. I'll give you exactly. So I created a virtual stock for you guys. It's called YouTube Players. So you go in here, you search, you find it. It was created 19 minutes ago. So you click on this. You need first to make an account for MarketWatch. That's not a problem. It's also free, you know. Click on YouTuber Players, and then we'll go to. So this is me. I'm on the only plan. Will be a join. Here somewhere, for a new case, you know, will be say it's join. You press that and you join my game. Okay, so I invite you to come here, and we can go to discussions and every day and talk. I'm gonna look at you tradings you make, and I'm gonna see it, what price you bought, at what price you sell, you know, and I'm gonna give you advice what that was a good move or not. Okay, so you can join this site, and we can talk. Okay, now trade on paper. So this is marketwatch.com/games/YouTube players. Okay, come here. Now, do not invest in individual stocks. Okay, let me show you a chart. Okay. Okay, so now we are on. Let's go to. Let's take this one, Marvell Technology, or let's go to Chevron. Okay. You need to look at the chart. Is this an uptrend or an downtrend? This is definitely in a downtrend here. Okay, it doesn't matter. So if you invest in this stock anywhere in here, so at 134, let's say, and now it's 76, this is a huge drop in here. You cannot afford this kind of movement, at least not at the beginning. Okay, so what you want to go, you go to. So this is the Dow Jones 30, means 30 best companies. I'm sure you heard about this. So General Electric, Chevron, Exxon, Walmart, Merck, Apple. You have a lot of. Apple, which did very bad, was the worst lately. Okay, 192% loss. Microsoft, you have the best one. You do not want to invest in any individual, in any of this. It will be too risky for you. So what you can do, however, you can invest in an ETF. An ETF, which is actually what's an ETF doing? So DIA. Okay, this is Dow Jones Industrial Average. This is an average. This is an average of all these 30 companies. Okay, so it went down pretty harsh, 1.3 this time, which is a pretty big move for an index ETF. But look, let's say from the top 182, 162, now it's 173. You don't have this. You can sleep at night. Okay, so it's not gonna ruin you one day. It's not gonna next day, or in the next 2 months will be 50% down. Okay, it's very unlikely this to happen. Also on the upside, of course, you're not gonna get too much money if you invest in this one, but it's safer for you. This is safer. So DIA, this is one. It's an average of these 30 companies. Then is SPY. This one mirrors S&P 500. So this is an average of 500 companies. Much safer than investing in any one of them. So this is the other option, one of my preferred ETF. Then is one which mirror Nasdaq. This is Triple Q. Okay, again the same idea. So right now, if you invest in any of these ETFs, you'll be safe. Okay, so I say about the okay, use cost averaging. Let's look back, because why it's also very important. Okay, let's say you invest in Nasdaq. You invest in Nasdaq, let's say at the worst time in here. Okay, this is 2008. Let's see, you bought it here. Okay, If you bought it, if you put a lot of money in there, that would be a problem for you. But let's say you start with 500 bucks. You bought 500 here, then okay, it's going down. Of course, you'll see losing money, okay, but every month you no spend no more than 500, okay. You're here, from here you're making profit, okay. By 2010, by 2010, okay, you already bought at 2009, so some of the stocks make a profit. So probably somewhere in here, 2010, say you are even, okay, and from now on you'll start making money, okay. So the idea is you make money by cost averaging with these index ETFs, because overall, no matter what, they'll resume going up, okay. So if you look at this, actually look at the Dow Jones, because I can go, let's say, let's monthly, let's look this yearly, okay. Doesn't work somehow. Let's try SPY then. Okay, it doesn't matter. Okay, look. So no matter where you bought it, okay, by cost averaging, now you'll have a profit, okay. So but you need to wait. You need to wait. You need to wait some time. So again, if you bought it here in 2009 at the peak, or here in 2007 at the peak, you know, and then for a while you see your account on it, which is not good, especially if you're a beginner. You can panic easily and sell, you know. But if you bought all the way here, okay, that's gonna be much better, okay, because you spread the risk. Okay, so for now, I leave it here. I leave it here. It's okay. How many minutes? 17 minutes already. Oh my God. Okay. So if you're a beginner, start with SPY, DIA, or Triple Q. Okay, and don't make big moves. And spread the cost. Buy a little bit this month, buy a little bit next month, and so on. Even say the market will go down from here, okay, you'll still be okay. You'll be okay. It doesn't matter, okay. If you started here and say we'll go back, it doesn't matter. You'll buy all the time. You'll buy now at high price, then you'll buy at lower prices. Eventually in years will go much, you know, further up. Okay, I'll show you when we'll go to intermediate level, and next one, I guess. I'll show you how to time a little bit the market, not too much, because it's timing the market and speculating here. But if you do a little bit, say when the market, when you're sure that it's already a bear market and you need to sell a little bit, or you're sure that it's a bull market, okay, I'll show you when this is gonna happen, okay. Then you can do a little bit, and you'll do much better than cost averaging, you know. But this is the next step, okay. And then eventually day trading, this kind of stuff, okay, I'm gonna show it. I know how to do it, you know, but this is already advanced stuff, and it's a lot of risk. Even people who know how to trade, sometimes they burn their fingers, okay. So we'll leave it here. Please come back for the next. I make another couple of videos, probably at least for this, and eventually I'll make one trying to analyze where the stock market is at the moment. Actually, this is very important. It's people say the bear market already started, and I can give you my opinion about that. Okay, so see you guys. Bye.